Hello everyone, my name is Zach Stanley, and today I would like to talk about my project, which revolved around sentiment analysis of tweets with big data and how public perception via Twitter, so people expressing themselves with tweets, in other words, correlates to companies and their corresponding stocks, and how both of those perform based on that perception. So it sounds fairly specific, but I'm going to get into a little bit more information about how I got around to choosing this topic and why it has some very good big data application potential. Now, the problem statement initially began as a very broad topic. So the overarching question was, how does news information, and this could be in the form of articles with information released, television, newscasts, or even tweets, change the existing opinions of the general public about either specific organizations related to that information or public figures like politicians and celebrities? And so I wanted to figure out, how do these specific events either significantly or insignificantly impact the overall general public's reaction and overall feelings towards these organizations and people. And leveraging big data, I wanted to figure out a way to have a very large survey of people without actually needing to survey them, and introducing all of the bias that could potentially come from that. And so, based on that initial idea, I ended up scoping the project much more narrowly for this specific situation. And the more narrowly scoped project involves looking at, how does public perception, in this case gauged with tweets, correlate to the performance of a specific company and its stock valuation. So instead of looking at specific people and organizations, I just narrowed it down to a single specific entity and how the overall feelings of people posting on Twitter correlate, or whether or not they correlate at all, to that specific company and events surrounding it. And so I actually chose Facebook as the company and stock of interest in this case, which, if you're not familiar with the recent events surrounding it and its stock, it released information about some low potential projected revenue growth, so lower than investors were anticipating, and on top of that, some increasing expenses as well. And that came directly from the mouth of the company's CFO. And so, as you can see here with a quote from MarketWatch.com, the stock dropped about 7% right when the actual report was released, but then once the CFO began speaking with the public, that dropped to a huge loss of 20% in the stock's value. And it began on Thursday, July 26th, as soon as the stock was available to be purchased and sold in the morning, and then at the end of the day, they had lost over $120 billion in value as far as the market capitalization of the company. So this is a very significant event for such a large and, up to that point, high valued stock and company. And so with this happening in the news, I actually did a 180, and instead of analyzing tweets surrounding Trump and the Russia summit, I turned around and decided to look into this and the potential for correlating these tweets to the performance of a well-known stock and company like Facebook. And so that is sort of the background as to why I chose to analyze the sentiments behind Facebook as a company and its overall stock for my final big data project. So let's move on and look at how I decided to scope this even further. So really, my desired solution or my end goal for this was finding a way to accurately assign sentiment values, so feelings in general, to these tweets based on the content of the words within them. And to go about this, I'd really have to pull some huge volumes of tweets surrounding the keyword Facebook, hashtag Facebook, and some other variations of that to analyze the reactions related to the recent event in Facebook stock. And I didn't want to restrict it to just tweets surrounding Facebook and the stock drop. I wanted it to also be inclusive of tweets that were about Facebook that didn't involve information about the stock, because that would imply that the event wasn't that significant if a majority or almost all the tweets were about the company unrelated to that news. So I really wanted to be able to gauge the overall significance of this information. And so with that being said, I wanted to be able to understand if there was a spike at all in negatively correlated tweeting about the time that there was that drop in Facebook stock value. And if there was a connection or a significant correlation between those at all, how long does that spike in negativity last? Did it last just for that 9:30 a.m. time period where everybody sold the stock at once and then tapered off? Or did it last for a number of days or more than a few hours after the initial event? So I wanted to see the impact and also the duration of this based on the reactions and feelings of people that were tweeting. So my methodology and the tools I was able to employ as I went about trying to address this issue began with a Twitter developer API. So I requested permission and then was able to pull tweets with Twitter's permission based on that keyword Facebook, hashtag Facebook, uppercase and lowercase for both of those. And I ended up pulling around 6,000 tweets. And with that, I was able to analyze those tweets, around 1,200 per day from July 24th all the way up to July 28th. Because the actual event itself happened on July 26th in the middle there. So I pulled 2 days before and 2 days after that event, trying to gauge how the overall perception, whether there was already a negative buildup of perception around Facebook and that stock, or whether that happened all at once when that information was released, and whether that continued to be a negative perception that was relatively frequently tweeted about, or whether that plateaued and no longer became an issue. So first step was, again, pulling those tweets using a Twitter developer account. And then the intermediate step involves some data manipulation, converting that JSON file to CSV and cleaning up that data and putting it in a format that would allow me to analyze those specific words and the content of all those tweets for actual sentiment analysis. And so that involved using Hadoop, since we are dealing with a big data format, and R to perform the manipulation with some coding. And at the bottom there, that image is meant to represent the sentiment analysis packages that I was able to employ to go about tying specific words within those tweets to actual feelings or emotions. And I'll get into that a little bit more here in a second. And then finally, the end of this process involves taking all of that information and then creating powerful visual data visualizations that allow you to understand and represent the trends or the meaningful, statistically significant alterations in feelings across that 5-day time frame. So how do we display the data in a way that actually makes sense and showcases those changes in a meaningful way? And so those are the tools I really used, and that's sort of the process flow throughout this project. Now, looking ahead, I began, as I said, using a Twitter developer API and was able to pull 6,000 tweets from that time frame of July 24th to July 28th, convert that to CSV and import it into HDFS, and there is the string of code I used to subsequently create my data frame so that this could be manipulated much more easily using the Cloudera server. And then, once I was able to manipulate that data and those 6,000 tweets with R, I was able to install a package called TidyText, which contained 3 different lexicons specifically for this sentiment analysis. So those are called Affin, Bing, and NCR. And the first one, Affin, classifies a given library of words on a scale from -5, meaning the most negative, all the way up to 5 for the most positive. And Bing, on the other hand, only had a binary positive or negative classification for a different list of words. And then NCR had another library of words where it associated each of those words with one of, I believe, 10 different emotions, those being positive and negative, similar to Bing, but also some very specific ones, including fear, anger, sadness, disgust, surprise, joy, anticipation, and trust. And so I'll talk a little bit more about how I went about utilizing those 3 and comparing the insights that you could pull based on those lexicons. And here's just a look at some of the code I was able to use to pull that data together and join it with, in this case I'm showing NRC, that lexicon, and exporting that to Tableau to be displayed. But I performed a similar process for all 3 of those lexicons and performed a sentiment analysis to see what the differences are and see if I could get some different, more specific insights for each one. So first off, this is not the intent of the project, but this is just a quick high-level view of what I was able to pull using MapReduce and word count. And here are just the most frequent words used within those tweets. And as you can see, there's some to be expected, like Facebook, billion, Twitter, people, social, etc. But then there are also some that were pretty frequent that you wouldn't normally expect to see except in the light of the recent significant events. So privacy, history, revenue, earnings, shares, market, and growth in stocks. So those are just some examples of showcasing that there is some significant talk around the Facebook stock itself. And so first off, I'm going to show 5 quick views of the 10 emotions or the sentiments that can be classified using NRC. And so this lexicon shows it, as you can see in the top left, this is the 24th, shows how frequently these emotions were present based on the words and the content of the tweets on those days. And so the largest bubbles signify that that was the most frequently seen emotion based on the words used in those individual tweets. So as you can see to start, positive was the largest initially and the most frequent. And as we progress to the next day, you can see a pretty significant change where there's actually more negative, fear. I'll go back real quick so we can see that one more time, where the negative grows, joy and positive shrink, fear grows, and I believe sadness does pretty significantly as well. And so from that transition, you can see some pretty interesting changes in the overall emotions of the tweets. And again, the 26th is the day that the changes actually occurred and the stock dropped. And so this shows that there could potentially be a correlation between that event and the overall sentiment behind these tweets. And so moving forward, however, something even more interesting is that as you go from 26th back to the 27th and 28th, there's actually a regression where the positivity grows and negativity shrinks, and the overall generally positive joy and trust grow, and the more negative ones shrink. And so there's sort of a flip-flop as the next 2 days progress, implying that that significant event did have an effect on the day it happened, but that it quickly tapered off, and that there weren't very impactful reactions to it after the day itself. And so this actually correlates to the trend of the stock, where it dropped significantly and then plateaued. And so potentially there's a correlation between that dying down of those emotions, and then those emotions also correlating to the stock tapering off and people not selling it anymore because they weren't as heated or weren't as upset by that news. And so moving forward, you can see another view from Tableau that's just a nice breakdown of the 10 emotions, the 10 sentiments. And this isn't all 5 days combined. It just gives you a good idea of the different options that were out there and the proportion of each across the entire 5-day time span. And next we can look at emotions that I pulled as probably the most important when looking at it from the perspective of an investor, which are fear, negativity, surprise, and trust, or lack of in this case. Where if you look at the middle day on day 26, you can see that negativity had a decent spike and trust went down slightly in terms of the percentage of tweet content that was related to those emotions. And surprise and fear were actually relatively stagnant. And so there may or may not be a significant correlation in this case, but I decided that those metrics would be something that investors might want to look at on a regular basis in order to gauge whether a stock is volatile based on the overall public perception of it and likely to drop in the near future. Now this next slide is another view of, again, all 10 of those emotions, but then broken down between just negative and just positive. And if you look at the chart on the left, a blown up version of those negative and positive graphs, you can see that there's a spike in negativity and, again, a trough in positivity on day 26. Now that was all NRC data displayed. This is actually a Bing lexicon now, which was, if you'll recall, just a binary positive or negative decision. And this aligns pretty nicely with the last graph we saw, where negativity had a spike on the 26th. As you can see here, it goes from 45% on day 24 all the way up to 65% on day 26. So a 1.5 times increase, and we can see that positivity obviously decreases from 55 to 34%. And so now looking at reactions with the Affin lexicon, this one classified the emotions from a scale of -5 all the way up to +5. And as I spelled out here, 3, 4, and 5 can be defined as positive. -3, -4, -5 can be defined as negative emotions. And then -2, -1, 1, and 2 can be seen as neutral or at least apathetic. And so looking at these three charts, you'll see the positive emotions on top didn't necessarily see a huge change. They weren't very present in the first place. You can see apathy or neutral emotions sort of take a bit of a dive on day 26 and then pop back up. And then you can see that the negative emotions had a little spike but then also died back down pretty quickly. And so what's important about that, again, is that we're seeing these trends across all these charts where there's a spike in negativity or a trough in positivity, but that it tapers off and that it's not a long-term effect on the overall emotions of people. And from an investor standpoint, this might not be a long-term effect on the stock itself, which is what we're seeing at the moment. And as we come to the end here, I also tried a different perspective on sentiment analysis where I looked at logistic regression. And so I defined day 24, 25, 26, 27, and 28th of July as a factor with 5 unique levels. And what I wanted to do here was to see if there was a significant change in the overall perception of that company based on the time period. And unfortunately, there was not a statistically significant change given potentially the smaller size of the data set only being around 6,000 tweets, and potentially it was not a significant enough change even though the graphs suggest that there may or may not have been such a spike in negativity. And so the closest to being significant you can see on the chart on the right is day 26 has a p-value of 0.32, implying around 68% certainty that is significant, but that's not close to our 95% confidence that we'd normally like to see. And so because of that, we can't say that it is quite significant when you move from day to day, looking at, in this case, a fin, looking at the sentiment ranging from -5 to 5, most negative to most positive. And so, with that being said, my conclusion came to be, again, that there was a noticeable spike, at least from looking at the charts, in those negative emotions on the day of the Facebook drop, and then that tapered off as the stock value steadied at the same time. But like I said, more info would be needed to conclude that this is statistically significant. And another bit of information is that this logistic regression method might be more applicable to larger data sets, like I said, with some more significant differences and more high impact events surrounding them. And sentiment analysis could be used on a consistent basis where you have high velocity of data, high volume, obviously we already had here, and you'd be able to gauge public opinion and correlate it with stock fluctuations ideally. So definitely some potential for building on this project in the future. And I'd like to see more variety as well in the form of polling from either Facebook, comments, or news articles on the Wall Street Journal, etc., and to figure out potentially how to have a better predictive model and correlate the public perception of companies and their stocks with the actual performance of that stock. And so that wraps up all I'd like to talk about today on this Big Data Final project. Feel free to come to me with any questions about the methodology or the results I was able to glean from this, and hope everybody has a good day.